It's the beginning of February, so you know what that means, right? If you've been with me, market update. We're going to look at what the market did in January. Stick around. Hi, welcome back. My name's Joe Brown. I'm a realtor with Century 21, List with Beggins, located in South Tampa. Thank you so much for being here with me today. So if you've been with me, you know at the start of each month, I look back at the previous 2 months just so we can see some trends. And what I would say to you is stick around to the end because I have some interesting graphs. I found them interesting, and hopefully you will too. So let me move all this over so I can put my chart up, okay? Boy, that was quick. So if you've been with me, you know I talk about the 5 zip codes of South Tampa: 33606, 33609, 33611, 33616, and 33629. So the South Tampa Peninsula. And I look at several categories, and so I'm going to put my chart up here just so you can follow along. And I like to show 2 months of charts just so we can see some trends that are happening. And that's why I have graphs at the end to share with you just for a broader picture. So take a look at active listings, right? Active listings still down, right? But we dropped about 20 houses. Now again, we're just coming off the holidays. People have not yet decided to list their house. So this is a category I always keep my eye on to see active listings. Take a look at new listings. And this is good to see, right? We're up to 217. It's an increase of 80 homes from the month before. I've said in the past, the average, if you take all the new homes over the year, divide by 12, it's about 250. Well, the past several months, we've been below 250, which is really concerning. But we're back up to 217. I did a video a couple weeks ago, and I addressed the question about why would sellers move? Because the majority of sellers at this point, the majority of homeowners at this point, I want to say 60%, have mortgage rates below 4. Well, if they decide to sell and move, are they going to go into a higher mortgage rate? And so a lot of sellers are saying, I'm saying put. The reason they would move is change of family dynamic, either a divorce or a birth or a death, kids moving back in, kids moving out, or a job transfer, right? So there are reasons that people are selling. I think what we're going to see more of are people who own investment homes sell to get the equity out. We may see some of that. And if you're one of those, you may get a call from me, okay? Look here, days to sell, right? And this number's creeping up. Again, we're looking at December and January, coming off the holidays, higher interest rates. So this is something that I keep an eye on just to see, are things moving faster, are things moving slower? If things move faster, home prices are going to accelerate. If the days to sell extends to 60 days, 70 days, we may see home prices stabilize or even come down a little bit. So again, I don't want to generalize and say, oh, days to sell is expanding, because we are coming off the holidays. If this were May or June, that would be a different story. So again, this is something you should keep an eye on, something I'm going to keep an eye on. Take a look at sales, and you can see sales are down 117. And I have a chart to show you later. It's been a steady decline. Median sales price. Now, I don't want you to overreact and say, oh, Joe, look, average price of homes is falling. Well, again, this is always my caveat. We don't know the age of the homes, the size of the homes, the condition of the homes, right? If I only had 5 pairs of sunglasses to sell, but they're polarized, they're stylized, and they're $50 a piece, so I report earnings at the end of the month that all my sunglasses sold $50 a piece. The average price, $50. But next month, I just get regular sunglasses and they're $10 a piece. So then I say my sunglasses are $10 a piece. And you can say, Joe, sunglass price is falling. Well, we don't know, right? That's my point. We don't know the quality and the condition, the age, the size. We just know price. That's why I always wonder, should I continue sharing the median sales price? It's a number. It's out there. We can't read too much into it. Take a look here at the ratio. And this is the ratio of what a home sells for to what it was originally priced at. And you can see we're still about 94%, 94, 95%, which is where we've been for the past several months, just in that range. So for example, if I list my house at $500,000, well, 5% of that is $25,000. So my house would sell for $475,000. That's basically what it's saying. Months of inventory. You can see we're at 4 months. And now, for those of you who are new, but just as a refresher, if we take a look at 12 months, right? If homes sell for less than 6 months, it is a seller's market. The closer you get to 1 or even under 1, that means homes are selling within weeks, the faster prices accelerate. So we're at 4 months. Prices are still accelerating, but not as fast as they were. I did a report today, Hillsborough County, year over year, the median sales price of homes went up 2%. So home prices are still accelerating, but back in 2021, when days to sell were 12 or 10, home prices were accelerating 2% per month. So now we're at 2% per year. So that's my point. We're at 4 months, home prices are still accelerating, but at a slower pace. So that goes back to sales activity, days on the market. If days on the market becomes faster, we're going to see home prices accelerate. So now we're at the point I want to share some charts with you. And I skipped over months of inventory quickly because I want to show this chart. So this chart goes back to July. I forget whether it's June or July. I'm pretty sure July. So look at months of inventory, and we see months of inventory is going up. So what does that mean? We have more inventory on the market, right? Well, not necessarily. So let's take a look at active listings. What's active listings doing? Slightly going up, but not terrible, right? It's not pronounced. In fact, you can see it's even gone down some, right? So how can we have more months of inventory with lower supply? Well, it has to do with, before I get there, let's take a look at new listings, right? And this is what I was talking about. You see that very top line is 250. And so since July, we've been below 250. And even in January, we're at 217. But what we can see, people putting their home on the market has really come down. So fewer homes on the market, but the months of inventory has expanded. Why is that? Because of sales. Look at the sales numbers. Even in January, sales has come down. So months of inventory, the way we figure that is how many homes on the market divided by how many homes sell per month. So if there were 100 homes on the market and 20 homes sell per month, then I have 5 months of inventory. I can sell 20 homes per month and use up those 100 homes of inventory. But let's say my sales went to 50 homes per month that sell, and I have 100 homes on the market. Well, I can take care of that inventory in 2 months. So then my months of inventory is 2. So when we see an increase in months of inventory, don't think that means there's more supply. It could be, but it's in combination with lower sales. Now, I personally think we're going to see an uptick in sales in February for 2 reasons. One, we're getting away from the holiday season. But then 2, if you remember back late November and December, mortgage rates started coming down. In October, early November, mortgage rates were right at 8%. Well, now the new rates were announced yesterday, 6.63. Well, let's say a family has $2,500 to spend on principal and interest. Well, this change from 8% to 6.5, 6.6 means they have increased their purchasing power $48,000. So so if they were looking at homes of 300,000, they can now look at homes 348,000 and still have the same payment. So a little bit bigger house, nicer condition house, just with that change of interest rate. That being said, I think, and I've said this several times, I think mortgage rates are going to be around the 6.5% almost all year, right? That maybe towards the end of the year, October, November, we may see it come down below 6.5. But right now, I think we're at this between 6.5 and 7% for the next several months. So if you are a buyer, you have more purchasing power right now. So continue to look, reach out. Let's see if there's a home that fits your criteria. If you're a seller, just know that there are more buyers looking for homes and they can afford more homes. But you as a seller have to know where you're moving, right? So on one hand, it doesn't make sense to sell your house and get a bigger mortgage, more monthly payment. However, for some of you, you can sell and not have any mortgage at all. So it's not straight, black and white answer. There's a lot of gray. Anyway, thank you so much for being with me. Listen, I want to be your trusted advisor. So whether it's you, whether it's your friends, family, thinking about buying or selling and you're not sure, reach out to me. Go to my website, joebrownc21.com. There's a contact me button. You can read my bios. You can search for homes. Listen, there's no obligation to talk to me, right? So just reach out. Let's have a conversation. And see what's best for you. Thank you so much for being here with me today. Until next week, take care.